Welcome to our evening live virtual classes. We are in the LVRC, which is our revision class for the upcoming attempt. In this session today, we are going to deal with some very special topics which may not be required in every day-to-day operations of the business, but they are very special because they have a very specific provision made for it. So what we are going to start with today with one of such unique activities, that is job work. Now, when we talk about job work is basically what? It is basically where you are working on somebody else's goods. So you are provided the raw material by some other person. We call that person as the principal or maybe the principal manufacturer. And you are required to complete the allotted work, which may be some part of processing, maybe finishing, maybe making it complete, making it ready. So the activity which you are carrying out on it is called as the job work, and you are referred to as the job worker. Now, many times the process may be a simple process or it may be a very technical process. That makes no differentiation. The important point is that the person who is providing the goods to you, the person that is the principal, should be a registered person, and the person should be sending you the goods on which the processing has to be done. Many times the person may also provide you the capital goods to be used for doing that processing, and using these inputs, capital goods, you are supposed to carry out the allocated work, which is the job work. Now, the basic idea is, in this particular case, if you see, activity is done by you as the job worker. But what the law envisages, the concept of the law is to make the principal responsible for meeting the compliances on behalf of the job work in respect of the goods which the job worker is doing for that principal. So basically the ideology is to make the job worker free of the procedural burden, because many times the job workers may be working in an unorganized sector. They may not have proper educational background. So to make it easy for them, the GST law has made such specific provisions. So what are these provisions that we will go one by one? First, we start with the definition. So section 2 clause 68 of the CGST Act defines job work as treatment, process, which is undertaken by a person on goods belonging to another registered person. So in the definition itself, they have incorporated certain requirements. First, the principal should be a registered person, and the goods on which the job worker is performing his process should belong to the principal, and the job worker is only expected to carry out the work on the goods sent by the principal, and whether the activity is covered within the scope of job work or not would have to be determined on the basis of facts and circumstances of each case. Now, there may arise a doubt as to whether any input or other than the goods provided by the principal can be used by the job worker. So this is very common. It is not necessary that each and everything may be provided by the principal. So as you can see in the image, the principal is a car manufacturer and he has sent the car for painting to the job worker. Now in this particular case, the job worker is provided only the main item, that is the car. But for carrying out the job work process, the job worker is using his own paint, his own chemicals, varnishes, and other subsidiary articles. Now, whether it would still be amounting to job work, why this question? Because the job worker is using some of his own material. So in this regard, it is clarified that the job worker, in addition to the goods received from the principal, can use his own goods for providing the process or the job work service. Now, what are the important provisions? So where the principal and the job worker are located in different states, the requirement of the registration as per section 24 clause 1, which provides for compulsory registration in case the suppliers are making any interstate supply of services. However, as you know, in section 23, there is some relaxation. Plus, we know that exemption from registration has been granted in case the aggregate turnover of the interstate supply of taxable service is not exceeding 20 lakhs. So this is what section 23 provides. Next. So the final conclusion that we can draw from all the above pointers is that the job worker is required to obtain registration only in cases where the turnover of the job worker computed on all India basis, that is PAN basis, in a financial year exceeds the threshold which depends upon the state. Now, again, we know one thing, that what job worker is doing is a supply of service. So job worker will be treated as a supplier of service and is liable to pay GST if he is liable to be registered as per the above criteria. Now, once he is liable to pay GST, he also has to issue invoice as per the time of supply provisions that we studied in the earlier topic of section 13, and the invoice has to be issued in accordance with provision 31. Value of the service, that is a job work service, would be determined as per 15 and include not only the service charge, but the value of goods or services used by the job worker in the service if they are recovered from the principal. Now comes an important part. It is found that in some cases, the principal is providing some items like molds, digs, fixtures along with the inputs, which the job worker will be using in making the final output or carrying out the job work. Now, the question that may arise is whether the value of this molds, dies, jigs, fixtures, tools, which have been provided by the principal himself to the job worker, whether they have been used by the latter for providing the job work service, whether it has to be included in the value of the job work service. Now, here comes the valuation concept. Now, in valuation, section 15(2)(b) requires that any amount which the supplier is liable to pay in relation to a supply, but it has been incurred by the recipient, will become part of valuation, provided it is not included in the price. Accordingly, the final conclusion is that the value of such molds, dies, jigs, fixtures, tools may not be included in the value of job work, provided its value has been factored in the price for the supply of the job work service. Now, besides this, we have some very specific provisions relating to job work. So let us go to them. So first we have the common definitions which we have studied. Now we come to job working provisions and job working procedures. So there are two broad sections which covers job working provisions. The main being section 143. What does 143 states? So the provisions relating to job work, as per 143, it requires that the provisions of the said section will be applicable to a registered person. Thus, a principal who can send the goods for job work under this provision must be a registered person. Anyways, this is coming out from the definition of job work as well. However, principal is not obligated to follow the said provision. Why? Because it is in his choice whether or not to avail the benefit of these special provisions. In case principal is not availing the benefit of the provisions of 43, the sending of inputs for processing to be undertaken by the job work will attract provisions relating to normal supply on both the principal and the job worker. So it means what? The provisions that we are going to study under section 143, which provide some relaxation, are optional. A principal may decide to follow them or may decide to follow the normal provisions of the GST law. Now, what are these special provisions or relaxations under section 143? So, first point what 143 states is that the principal can send goods to the job worker without payment of tax. This is the first important point, special point, that whenever the principal is sending his goods on which the job work has to be done by the job worker, while sending the goods, whether any payment is required. So 143 says that the principal who is obviously opting for 143 benefit need not pay any tax. So the registered principal is allowed to send either inputs or capital goods without paying any tax to the job worker, and from there to another job worker, and also after completion of the job work can bring back such goods without payment of tax, or remove the processed goods from the job worker's premises directly to the customer. So as a principal, I can send goods to job worker. While sending, there is no need of charging GST. From one job worker, I can ship the goods to another job worker. After the entire job working is done, I can either get back the goods to me, or I can from there ask the job worker to dispatch it to the customer. The principal is not required to reverse the ITC availed on inputs or capital goods dispatched to job worker without payment of tax. So neither on my outward side there is any tax implication, nor on my ITC side I need to do any reversal. This is what is the special, you can say, relaxation or benefit given by 143. Now, the principal can also send inputs, capital goods directly to the job worker without bringing them to the premises. Now, what is this? So when the principal is procuring the raw material or capital goods, and if transportation wise, geographically wise, the place of job worker is more nearer to the supplier, then the principal, instead of getting the goods to his place first from the supplier and then again sending it to job worker and incurring extra cost plus unnecessary time wastage, this provision allows that the principal can ask his supplier to directly dispatch the goods to the job worker, which will be under the bill to ship to model. And obviously still the principal will be eligible to get the ITC, because under bill to ship to model, when on your instruction goods are sent to the other third person, you are still eligible for ITC. This is given even in section 16.2. Now, however, inputs, capital goods other than molds, dies, etc., which I have allowed you to send to the job worker without payment of tax, without reversing ITC, has a time boundage. What is that time boundage? That they should be returned back to the principal within 1 year, which is for input, and within 3 years, which is for capital goods. So from the date I have sent the goods to job worker for carrying out the job work, the job worker should return back to me within 1 year if it is inputs. And if I have sent capital goods to be used in the job working manufacturing process, it has to be returned back within 3 years. Now, the period of 1 and 3 years may, on sufficient cause shown, be extended by the commissioner for a further period not exceeding 1 year and 2 years. So 1 year for input and 2 years for capital goods. So total inputs can remain with the job worker for maximum 2 years, and capital goods can remain with the job worker for maximum 5 years. The extension of time is allowed to cover situations where the period of 1 year specified is not adequate in respect of job work, which will include many of these special operations. Now, the provisions of return of goods is not applicable to molds, dies, jigs, fixtures. Why? Because see, students, you have to understand the practicality. Molds, dies are such that it may not necessarily have a life of 5 years, 10 years. It may have life of few months. It may have life of a year, 1.5 years. So if you're keeping the condition of bringing it back, maybe that may not be practically possible, because after using it for some number of months or number of batches, the molds, dies, jigs may be useless. So what is the point in returning? Instead, the job worker can scrap it, and that again is given as a special treatment. After processing the goods, the job worker may clear the goods under the instruction of the principal, either to another job worker or any of the place of business of the principal or the ultimate customer. Now, in this case, wherever the goods are sent from the job worker's premises to ultimate customer, obviously it becomes a supply, but it's a supply of the principal. So in that case, the principal has to suitably issue invoice and also make payment of the tax on final product. Now, whenever this option is being opted, what is that option? Supply of goods directly from the job worker's place of business. So after the processing, the principal has option to clear the goods from the job worker's place to a third party on payment of tax within India or without payment of tax for exports outside India. Now, this facility of supplying the goods by the principal to the third party directly from job worker's premises on payment of tax will be availed by the principal only after the principal has declared the job worker's premises as his additional place of business. So, if the principal wants to avail this specific facility that he can directly dispatch goods from job worker's premises to his customers, he should add job worker's place as his additional place of business. However, such a declaration is not required where job worker is already registered or principal is engaged in supply of notified goods. In such cases, in the case of direct supply, the supply of goods will be regarded as supply by the principal, not by the job worker, obviously. And it is further clarified that the time value place of supply would have to be determined in the hands of principal, irrespective of location of job worker's place or premises. The invoice would have to be issued by the principal, and in case of exports directly from job worker's premises, the LUT bond, as the case may be, shall also be executed by the principal. So in short, logically, where these are final goods of the principal, all provisions of GST law applies in the hands of the principal, not in the hands of the job worker. These principles would apply mutatis mutandis in case of supply of waste and scrap generated during job worker. So wherever the waste and scrap is generated and it is to be sold directly from job worker's place, you follow the same principles. Now, these are the provisions, the substantive provisions. Now, how to implement it? So for that, we have the procedural provisions. What are the procedural provisions? So before the goods are sent to the job worker, the principal is required to send intimation to the proper officer containing the details of the description of inputs intended to be sent to the job worker for the processing. This intimation also contains the details of other job workers, if any. The inputs capital goods shall be sent to the job worker using delivery challan and obviously the corresponding e-way bill. The delivery challan shall be issued even for inputs capital goods sent directly to the job worker. So where you are directly asking your supplier to dispatch to job worker, still you have to create delivery challan. Why? Because this delivery challan has to be uploaded in a very important statement, that is ITC 04. So for a tracking purposes, you will still raise a delivery challan. Delivery challan will contain the specified details and it will be accompanied by e-way bill wherever applicable. Now, responsibility of maintaining the accounts. So even though the inputs capital goods are with the job worker and they are being used over there, but since they are being used for the principal, hence it is the responsibility of the principal to have proper accounting done. That is opening stock, how much is used today, how much is closing, how much is the additional sent, etc. Now, what will happen if the goods are not received back within the time limit of that 1 year or 3 years or the extension? Now, we studied above that there was a requirement that you get back these inputs after its processing within 1 year or bring back your capital goods after or within 5 years, not after, sorry, within 5 years with extension, without extension 3 years. So in such cases, a question may come, what would happen if you fail to do this? Now, if you fail to bring back the goods, then the law says we will deem that the goods were supplied by the principal to the job worker. And most importantly, it was supplied on the day one when the goods were sent. So importantly, if you don't get back the goods within the stipulated time, it will be deemed that on day one when you had sent the goods, it was supplied. Now, interestingly, you are getting to know this today. Today means after 1 year. Let us say if it is for inputs and there is no extension. So today you are getting to know that, oh, 1 year back what I had sent has to be deemed to be a supply. Now, what is the impact of this? The impact of this is, obviously you'll raise invoice today. You cannot raise a backdated invoice and upload it. You'll raise invoice today, but for this particular deemed supply, you will be required to pay interest. Now, the goods sent for job worker acquire the character of supply when the inputs capital goods are neither received back by the principal or nor are further supplied within the stipulated time of 1 year, 3 years, or the extension. Most important, in such cases where inputs capital goods are neither returned nor supplied from job workers premises, the principal would issue invoice for the same and declare such supplies in the returns of that month in which this 1 year, 3 years has expired. As I said, date of supply will be the original date, and hence for this gap you have to pay interest. Now comes the next part. Now someday or the other the goods will come back because ultimately they are my goods. In such cases, when they will come back to you, interestingly, it would be now treated as supply by the job worker to the principal. So today, principal raised an invoice on the job worker, deeming it to be supply on day 1. Now, after a few months, when the job worker completes the work and send back the completed goods, the job worker will also treat the original goods as supplied. Because now, when I deem my supply of goods to job worker, so when the job worker is returning back the goods, the job worker also treat it as supply. And when you say treat it as supply, you have to pay the tax. Further, it may be reiterated that there is no requirement of either returning back or supplying the goods from job worker's place. As far as molds, dies, jigs are concerned, this is what we have already studied earlier. Now coming to the next provision dealing with job work, that is section 19. So first was section 143. Now we come to section 19. Now, what does section 19 deals with? It deals with the ITC on inputs capital goods sent for job work. So firstly, the principal is entitled to take rate of inputs, which is paid on such inputs capital goods which is sent to job worker. And the principal can also take ITC even when these inputs have been sent directly to the job worker. This is under the bill to ship to model. Interestingly, job worker is also eligible to claim ITC, but of what? On inputs used by him in supplying the job work service. So inputs belonging to principal is not eligible for the job worker to take ITC off. But whatever input services the job worker has used from his side in doing the job work, obviously those are job workers' goods. On that, job worker can take ITC. Now, time limit for return of inputs capital goods sent for job work or supply, etc. Now this we have already seen above, that the inputs should be returned back within 1 year, capital goods within 3 years, and from the date when they were sent. Where inputs capital goods are sent directly to job worker, this period of 1 year, 3 years will be computed from the date of receipt of these inputs in the premises of job work. So where supplier had directly dispatched it to the job worker, in that case, 1 year, 3 years time limit is counted from the date of receiving these goods in the job worker's premises. Now, again, if timelines are not met, then it will be deemed that these goods were supplied by the principal to the job worker on day 1. And then principal will have to upload the details in GSTR 1 and also pay tax along with interest. In case return of inputs capital goods by the job worker after stipulated time, again the job worker will be treating it as supply and tax accordingly. So you'll find that something common is there between 143 and 19. Now comes the next part. Special procedure for sending goods for job work, Rule 45. Now, Rule 45, read with Circular 38, is providing you some specific procedural requirements. Now, where goods are sent by principal to only one job worker, the principal will be sending it under the cover of delivery challan. Delivery challan should be issued as per Rule 55, containing all the details required in Rule 55. This is to be prepared in triplicate, and in terms of Rule 45 and 55, this delivery challan has to be sent. Important. Now, how this triplicate will be used? 2 copies of the challan may be sent to the job worker along with goods. The job worker should send 1 copy of the delivery challan along with the goods when he is returning back the goods. So in triplicate, 2 copies you will send to the job worker, 1 will remain with the job worker, and 1 will be returned back by the job worker in future whenever he return back the goods. Principal would be required to send intimation to the jurisdiction officer, and this is done by filing GST ITC 04 with all the information of the delivery challan and the quantity, etc. Now, second procedure is where goods are sent or shifted from one job worker to another. So many times it may happen that your goods require multiple processing and one job worker is only able to do one processing. So what you do, you complete one job worker's process, then from there the goods are shifted to the other job worker. In such cases, again, the goods have to be shifted using delivery challan. This may be issued either by principal or the job worker. So principal from his premises can still issue the delivery challan. Obviously, the location will be job worker 1 to job worker 2, but principal can prepare. Or since the goods are with job worker 1 can prepare. Alternatively, delivery challan issued by principal may be endorsed by job worker sending the goods to another job worker. So we had sent 2 copies of delivery challan. 1 copy is for job worker. Second copy, which he was supposed to return back to me, now instead of returning back to me, he will forward it to the other job worker. The same process may be repeated for subsequent movement to other job workers, indicating the quantity. Now, where goods are returned back to the principal, the job worker will send 1 copy of delivery challan which was received while returning back. Now, where goods are sent directly by supplier to the job worker, so again, principal asking supplier to dispatch directly to job worker, which is allowed. In such cases, the goods will be sent directly from the supplier's premises to job worker's premises with a copy of invoice, which is given to the supplier in the name of the buyer. That is principal. Job worker's name and address is also to be mentioned as the consignee, because anyways it will be a bill to ship to transaction. Now, in case of import by principal, where these goods are directly sent from the custom station to the premises of the job worker, in such cases, it has to be accompanied with the copy of bill of entry. Further, the principal shall also use delivery challan for forwarding the goods. Now, what happens if I have sent 1000 units and while returning, the job worker is returning me 100 units? So where goods are returned in piecemeal. See, if entire 1000 would have come, the job worker could have used my own delivery challan, which I had sent initially, to return back the goods, which we studied above. However, if it is to be sent in piecemeal, what he will do in such cases, the job worker can use a fresh delivery challan, because now he will be issuing 10 delivery challans, because he will be returning back me 1000 units in 10 installments. So he can use a fresh delivery challan for each return. Next, as a principal, I have to upload this form ITC04. This has to be done by 25th of the month after the said period. Now, again, here some relaxation is given, where the aggregate turnover of principal is up to 5 crore. It can be done annual basis. Where it is more than 5 crore, it can be done half yearly basis. Now, e-way bill. So, as we know that e-way bill has nothing to do with supply. It is a document evidencing movement. So, in such cases, wherever goods are sent either by principal to job worker to job worker, or job worker to customer, or job worker to principal, in all these cases, the movement has to be supported by proper documents. One, we have seen delivery challan. another important document is the e-way bill. Now, importantly, we know for raising e-way bill, there is a monetary limit of 50,000. However, in case of job work, e-way bill shall be generated by the principal or the registered job worker, irrespective of value of consignment. So, where goods are sent by principal located in one state to job worker located in any other state. Further, e-way bill shall be generated by the principal wherever required in case job worker is unregistered. So, any one of them can generate the e-way bill, but the most important point is it will be or it is required to be generated without seeing the 50,000 limit. So even if the value is 1,000, you will generate the e-way bill. Now some more procedural requirements. Registration when both principal and job worker are located in the same state. The job worker is required to obtain registration only if his aggregate turnover exceeds the threshold applicable to that state. However, where the job worker is located in one state and the principal is located in a different state, in such cases, where they are located in different states, the requirement for registration flows from 24, which provides for compulsory registration of suppliers making any interstate supply. Again, however, for supply of service, the exemption of 20 lakhs for registration applies. Therefore, the final conclusion of this is that a job worker being a supplier of service is required to obtain registration only where turnover computed on pan-India basis exceeds the threshold applicable to that state. Now, value of goods after completion of job work supplied directly from premises of registered job worker not to be included in the aggregate term. Now, this is obvious, where from the job worker's premises, principal is asking the job worker to send goods directly to the customer. Whatever is the value of these goods, the finished goods, obviously these are not the finished goods of the job worker. So they cannot be treated as part of turnover of job worker. It is always by default, logically, be the turnover of the supplier. That is the principal and not the job worker. Then comes the next point. What will be the treatment of waste? Now, practically, see, one possibility is waste can be returned by the job worker to the principal. However, many times this is not done because this is again unnecessarily spending on transportation, and anyways the item is waste, so it may not have that much value. So what is done practically many times is the principal asks the job worker to directly sell off the waste from there. So notwithstanding anything contained in the aforesaid provisions, any waste scrap generated during the job work may be supplied by the job work directly from the premises on payment of tax if such job worker is registered, or by the principal if the job worker is not registered. So instead of bringing back, you can directly ask the job worker to sell it there itself. Fine. Let us move on. Now, students, we come to an important topic, that is assessment. Now, firstly, what is assessment? See, assessment is a common term used in all taxes, be it income tax, be it GST, earlier excise, present customs. In all these taxes, the process of ascertaining your liability, which may first require ascertaining income in case of income tax, ascertaining taxable value in case of excise, customs, GST. So first you ascertain the subject matter, and from that you ascertain the tax liability. So this process of ascertaining, determining, computing your final tax liability is assessment. Now, as you know, today all laws require that the assessment should be done by the taxpayer himself or herself. That is the concept of self-assessment. So the basic rule is you assess your liability, you pay it, and in case there is any problem or we find something is not correct, we will do your scrutiny, we will do your audit, or we will do assessment from our side. We means department. Now, the first rule is that you have to do your own assessment. However, interestingly, there is a special situation or a special, you can say, provision called as provisional assessment. Now, what is provisional assessment? So it may happen that for some reason the taxpayer is unable to himself determine the value or the classification, and hence the rate cannot be determined, or whether exemption is applicable or not. So something which is required for computing the final tax liability, that is the rate, value, classification, exemption, is not determinable by the taxpayer, maybe because the product is new, maybe because the service is done for the first time, and the taxpayer does not want to commit a mistake and then bear penalty. So what the taxpayer can do, taxpayer in such cases can approach the department, make an application along with the necessary documents, and request the officer to do the assessment. So in order to safeguard yourself, in order to show your genuineness that you do not want to do a wrong assessment, what is allowed by the law is you approach the department and you ask the department to do your assessment. Now you will submit all the details. The proper officer, after asking for any further information or document if it requires, will issue an order indicating the rate, value, or both. And on the basis of that rate and value, the assessment is done. Now, this assessment is called as provisional because it may happen that the officer also may not be in a position to determine accurately the amount today. So what officer does, it gives you a temporary value, a rate, and asks you to determine and pay tax for the time being and honor the due date. And at the same time, takes a bond from you, takes a security from you. Why? So that in future, if it is found that there is some difference coming from this assessment, you may be asked to pay the balance along with interest. There will be no penalty. And to ensure that this payment of tax and interest is recovered, they are taking this bond and security. So let us go to the different types of assessment under GST. First is self-assessment. So this is the basic rule. Every registered person is required to himself assess the tax liability and file the return. If for some reason you are not able to do it, you can go to the officer. The officer will make a provisional assessment, and then a final assessment will be done over a period of time. This period of time should be maximum 6 months from the date of the order, extended by further 6 months, and by the commissioner by up to 4 years. So within this period of time, your assessment, which was temporary, should be finalized, and the difference, if paid extra earlier, refunded; if paid less, recovered with interest. Now, after assessment is done by the assessee, the next stage comes the scrutiny of returns. So the department is empowered to check your returns, to verify the accuracy, and to examine whether or not everything is correct. If any doubt comes up, or if there is any query, there is any confusion about any calculation, the proper officer may seek explanation. If explanation is provided by you and it is found sufficient, adequate, the matter is closed. If there is no explanation offered, or there is no proper clarification or evidence given, the proper officer will proceed under the further sections to take action of recovery. Now come some special situations. Assessment of non-filers. Now it may happen that you are defaulting the filing of returns. Now if you are defaulting the filing of returns, so if you have failed to furnish the returns, despite giving you the notice under 46, the proper officer will now proceed to determine your tax liability within a period of 5 years from the date specified under section 44 for furnishing the annual returns. So this period of 5 years is counted from the date of annual returns. So this is where you are not filing your returns yourself. Second is assessment of unregistered persons. Now what is this? So you have not taken registration, but you are doing some commercial activity, some business, and the officer is of the view that for some reason you are liable to pay the tax. Now, what could be the reason? You were liable to register either because your turnover had exceeded or because you are falling in section 24 and still you did not take registration and hence did not pay the tax. In such cases where you are an unregistered person, the officer is empowered to make a best judgment. Now, what is this best judgment? So, best judgment is the judgment where the officer will proceed to determine your value, your tax payable, and that would be done depending upon the available information and the information which the officer collects for doing this assessment. This assessment also has to be done within a period of 5 years from the date of filing of annual return or the date prescribed for annual return. Then comes summary assessment in special cases. So, wherever the officer feels that it is necessary, the officer may issue an assessment order imposing tax liability on a person based on any evidence showing a tax liability. If the person to whom the liability pertains, is not ascertainable, the person in charge of the goods will be assessed. If the order is erroneous, proper officer can withdraw such order and follow the procedures of 73, 74 or 74A. So these are the various types of assessments. Now students, we go to the concept of audit. Now we all know what audit is. We have done even in our articleship. So audit basically broadly is the checking verification of your records. Now here the purpose of audit in case of GST is to ensure that your tax computation, your ITC availment, your valuation, the classification, exemption eligibility, all are done properly by you. Now here, there are two types of audits. Audit under section 65 and 66. 65 is by the authorities. We call it as the GST audit. 66 is also by the department, but here they may appoint a specialized person who will be doing an audit on behalf of the department for some specific areas, that is special audit. Now, normal general audit under 65 is the commissioner or any officer authorized by him may undertake the audit of a registered person. Audit may be conducted either at the premises of the person or in the department. At least a 15-day notice has to be given, prior notice, and the time period 3 months from the date of conduct of audit. Extension not exceeding 6 months. So in short, in maximum 6 months, the audit should be completed. Now on completion, the registered person shall be informed about the rights and obligations and any mistakes done. So an audit report has to be given. And if it results in demand of tax, it may be done using 73, 74 and now the new section 74A. What is special audit? If at the time of following above procedures of scrutiny, inquiry, investigation, if the assistant commissioner is of the opinion that the value is incorrectly determined or credit is not correctly availed, the officer may appoint a chartered accountant or a cost accountant to carry out audit only of the limited area, that is the value or the ITC. Time period is 90 days, further extended by maximum 90 days. So this should be completed in maximum 180 days. And the audit will be conducted even if the accounts are already audited by the department or by the taxpayer from his professionals. Again, if this leads to some tax liability, the officer, the department will raise notice under 73, 74 or 74A. Now here, we'll take up some question and answers to understand this particular chapter in more detail. So just 1 minute. See. So we'll read a few question answers for more better understanding of the topic. So in summary, assessment order is necessary to be passed against the registered person only. So wherever summary assessment is done, whether it has to be done for registered person only, the answer is no. In certain cases, like where goods are under transportation or are stored in warehouse and the registered person in respect of such goods cannot be ascertained, the person in charge of the goods, like the transporter, the warehouse keeper, is deemed to be the registered person and will be assessed. So for summary assessment, it is not necessary. It is for the registered persons only. Next, whether principle of natural justice is must and it is to be followed before passing assessment orders against unregistered persons. See students, obviously the answer is yes, because principle of natural justice is the core of any judicial activity. So if your matter goes to court, the court always upholds this principle. So what is principle of natural justice? The simple idea or concept is that whenever any adverse action has to be taken against the taxpayer, the action cannot be taken until and unless the taxpayer is given an opportunity to justify himself, and that is done by issuing a notice. So the simple principle is that whenever any adverse action is to be taken, like here in this case, an assessment order is to be passed against an unregistered person. Okay, that person may have done fraud, may have purposefully not taken registration. Still, before you take any adverse action, pass an adverse order, the principle of natural justice applies. You have to provide a reasonable opportunity. Explain in what cases assessment order passed by proper officer may be withdrawn under the Act. Now, this is important. So, assessment orders passed by the officers may be withdrawn first in case of assessment of non-filers. The best judgment orders passed by the officer under Section 62 shall automatically be withdrawn where the registered person files a return. So, simple है, you did not file return, I took action. Now, when I have issued you a notice and I am taking action, if you come in front and file the returns, pay all the tax along with interest, automatically the proceedings will drop. So, however, the liability for payment of interest under 50 or payment of late fee under 47 shall continue. Where the registered person fails to furnish a valid return within 60 days of the service of the order, he may furnish the same within a further period of 60 days on payment of additional late fee of 100 per day beyond the 60 days of service of the order. And in case he furnishes valid return within such extended period, again the assessment order shall be deemed to be withdrawn. Second is in case of summary assessment. As per 64 of the Act, a taxable person against whom a summary assessment order has been passed can apply for its withdrawal with the jurisdictional authority within 30 days from the date of receiving the order. If the said officer finds the order erroneous, he can withdraw it and direct the proper officer to carry out determination of the liability. So the second case where the order can be withdrawn is summary assessment. Difference between tax audit, we can skip this. This is theoretical. Now, explain the recourse that may be taken by the officer in case proper explanation is not furnished for discrepancy detected. So, wherever the officer is scrutinizing your returns and any discrepancy is detected, the officer will intimate you in ASMT 10 and you have to reply in ASMT 11. Now, what if either you do not reply or your reply is not found suitable? In such cases, the officer will have power to proceed with the other provisions of the Act. What are the other provisions? First, he may conduct audit or he may direct the registered person to get his records audited. So one is department audit, one is special audit, or the officer may exercise the power of inspection, search, seizure, or the officer may proceed to determine the tax and other dues of the registered person. So these are the recourse available. Write a brief note on summary assessment that we have studied. Now, coming to some case-based issues. So Kulbhushan and Sons has entered into a contract to supply a consignment of taxable goods. However, since it is unable to determine the value of the goods to be supplied by it, It supplies for payment of tax on such goods on provisional basis, along with the required document in support of its request. So this is what? This is the case of provisional assessment. On 12 January, the AC of Central Excise issues an order allowing payment of tax on provisional basis, indicating the value on the basis of which the assessment is allowed on provisional basis and the amount for which the bond is to be executed, securities to be furnished. Kulbhushan complies with the same and supplies the goods on 25th January, thereafter paying the provisional tax in respect of the said consignment on 19th February. Consequent to final assessment order passed by the Assistant Commissioner on 21st March, a tax of 120 becomes due. Kulbhushan pays the tax due on 9th April. Determine the interest. Now, we all know that if in the provisional assessment the liability assessed was lower and later on in final assessment the liability is found to be payable, it has to be payable with interest. Now the question is, from what day the interest will be calculated? Students, the answer is it will be calculated from day 1, not from the date of final order. So even though the order is finalized at a later date, the interest is calculated from day 1. So section 60 bracket 4 stipulates that where the liability as per final assessment is higher than provisional assessment, that is tax becomes due. Consequent to order of final assessment, the registered person shall be liable to pay interest on the tax payable on supply of goods which is not due at the rate specified, that is 18%, from the first day after the due date of payment of tax in respect of the goods supplied under the provisional assessment till the date of actual payment. So in the given case, the due date of payment of tax on goods cleared on 25th January is 20th February, because 20th February is the due date for filing your 3B returns for January month. So your interest liability will be counted from day 1, that is from 20th February till your final payment of tax and interest. So when you count that, it comes to 18% for 48 days. So if in the given case it is assumed that consequent to final assessment order passed on 21st March, a tax of 420 become refundable to Kulbhushan, answer would be as follows. Now what if reverse happens? Originally you had paid more tax, now it has to be taken back. Interestingly, in this case, there is no interest which will be payable to you. So tax will be refunded back because you have paid excess, but it will be without interest. So for this, you have section 60 bracket 5, which states that where tax liability as per the final assessment is less than the provisional assessment and the tax becomes refundable, the person shall be paid interest at the specified rate, which is 6%. But from when? From the date immediately after expiry of 60 days from the date of receipt of application under 54. So interest is not starting from day 1 when you paid the extra tax. Interest will be if the refund is not made to you even after making application and 60 days have passed. So interest will start from 61st day, that also after making application for refund. Since in the given case refund has been made on 5th June, that is within 60 days from the date of application, no interest is payable. So when it comes to short payment, interest meter starts from day 1. That is the date when you should have paid the correct tax. But if it is excess payment, the refund is applicable. Interest will not start from day 1. You have to make application for refund. If after making application, the refund is not made within 60 days, interest will start thereafter. So students, this is all about the assessment chapter. Now let us go to the interesting or critical chapter of inspection. Let me take it a bit in detail because this chapter is something which is many times not understood by the students. So let us understand it in a bit detail. Now the first question is, why do we have such severe actions by the department like inspection, search, arrest? So obviously, we all know that doing search, which is in simple words called as raid, doing seizure, which is taking the goods or whatever valuable is found at the time of raid and seizing it. All these are very severe actions. So why these actions are incorporated? So we all know that many times every person is not an honest taxpayer. Many times the person may be a tax evader. A person may be trying to indulge in fraudulent practices to either avoid tax or rather even worse, what is happening in GST, to pass on fake input tax rate, creating more damage because it may be involving multiple future persons. In such cases, if the department gets to know about these persons and the department feels that if I try to follow the normal process of scrutiny, assessment, audit, it may not be helpful, or these persons may uh, run away, or they may uh, damage all the proofs that they have, and hence the department may not be able to proceed against them later. So they resort to such severe actions of such, if required, seizure and even eventually arrest. Now, these provisions are covered in section 67 to 70. So up to 66, we had the normal assessment and audit. 67 to 71, we have the provisions relating to search, seizure, inspection. We'll try to understand this in a bit detail, students, because it is very critical. Just give me a minute. So let us proceed, students. So we are discussing these special provisions under the GST law, some strict provisions relating to search, seizure, arrest, etc. Now, section 67 is the section which encompasses the provisions relating to inspection, search, etc. Now, what are these circumstances which are required under which the officer can carry out inspection? So, the provisions are: an inspection can be carried out sorry, only after the joint commissioner or an officer higher in rank gives the authorization. So remember, students, this is a simple logic. Whenever any strict action has to be taken, the authorization of that action always has to be done by a higher level officer. This is to ensure that at lower level, this particular power is not misused by lower level officers. So a higher level officer has to authorize this. Such authorization can be given by the JC or an officer of higher rank. But when that officer has reasons to believe that what? The taxpayer has done one of the following acts. First, suppressed any transaction of supply. Now you understand what is suppression. So you have made 100 transactions, but you are reporting only 60 to the government, 40 you are suppressing. Second, you have suppressed stock of goods in hand. So you have 1 ton quantity, but you are only showing 600 kgs. Claimed input tax credit in excess, so you have taken bogus credits, or you have contravened any provisions of the act to evade tax. So you are doing undervaluation, you are doing wrong classification, you are taking exemption which is not applicable. So in all these cases, what you are trying to do is you are trying to evade tax. Now, where this authority has reasons to believe. Now, what do you mean by reasons to believe? That we are going to discuss further. Only then they can order inspection. Further, any person who is engaged in transporting goods, or an owner or operator of a warehouse or any other place, has kept goods which have escaped payment of tax, or has kept his accounts or goods in manner that is likely to cause evasion of tax. So the persons who are engaged in transporting goods which are without invoice, so that is where you can say these goods have escaped payment of tax. So in short, people who are engaged in doing what you say unbilled transactions. We are selling goods, but bills are not prepared. And some transporter is even transporting those goods, some warehouse keeper is even storing those goods. Then inspection can be done with these people as well. So not only the main businessman who is dealing in the goods, but also the transporter, the warehouse keeper, inspection can be done. Now, this inspection is ordered only where the JC or the higher authority has reasons to believe. Now, this reason to believe, student, is a very crucial and a very special concept, and it is common in all the taxation laws wherever such strict actions are provided in the law. So wherever the law provides for strict action, in such cases, this particular basic requirement is there. What is the requirement? So reason to believe means having knowledge of the fact, which, although not amounting to direct knowledge, could cause a reasonable person knowing same facts to reasonably conclude the same thing. So basically, the main point is that wherever I get some information and that information leads to the conclusion that, okay, there is some type of tax evasion possibility, then this particular point comes into picture, that is reasons to believe. So reason to believe is not merely my suspicion, but it is a calculated belief, calculated, you can say, conclusion that I draw from the facts which are available with me. Is this fine? I hope that is clear to everyone. Now, besides inspection, you have another concept which is search. Now, either pursuant to inspection or otherwise, if it is felt that any goods which are liable for confiscation under the Act, or documents or books or things are secreted, in that particular case, the department may proceed to do the search. So see, in inspection, I am coming to check. In search, I am coming to check wherever I have doubts that you are trying to hide the goods, hide the documents. In such particular cases, they will be carrying out a more severe action, which is of search. So inspection is one action. Obviously, that is also serious, but search is more severe action, which we also call as raid. Now, in either case, the officer who is allowing this search also can allow this only when it has a proper basis to do that. Now, wherever a search and seizure has to be allowed, again, it can be allowed only by the Joint Commissioner or an officer of a higher rank or an officer authorized by such person who is not below JC. Again, if they have reasons to believe that goods liable for confiscation or documents or books are secreted in any place. Now, what is the meaning of the term seizure? Though it is not defined, the law lexicon dictionary defines seizure as the act of taking physical custody. So wherever I find something which I believe should be taken in my custody, so that you do not part with it, you do not sell off, you do not damage, you do not dispose of, that is what is seizure. Now, this may be actual or constructive. In actual, I take away the goods, documents, books. In constructive, I keep it there at your place, but with an instruction that you cannot dispose of it. In this particular case, the act of taking physical custody of property by an officer is under a legal process is seizure. It generally implies taking custody forcibly or contrary to the wishes of the owner, because obviously no person would be happy that their goods, their books of accounts or their valuables are taken away. But that is how the law is strict. Now, similar to seizure, there is another concept called as confiscation. Many times people believe seizure and confiscation is same, but there is a difference. So as per 130, goods, when they become liable for confiscation, means where they can be again taken away by the government. But the difference between seizure and confiscation is, in seizure, the goods are taken away and there is a process how they will be then finally used or applied or returned. In confiscation, the goods become the property of the government the moment they are taken away. Now, when it will be said that the goods are liable for confiscation, because see, when the act of search and seizure can happen where there is a reasonable belief that the goods which are liable for confiscation have been secreted, have been hidden at some place. So the question, obvious question comes, when we will say that somebody has tried to hide the goods, that is, the goods are being secreted, and most importantly, which goods are secreted? The goods which are liable for confiscation. Now, in this regard, section 130 provides the details. What does 130 says? When will be it said that your goods are liable for confiscation? First, the supply or receive of any goods is in contravention of the provisions of Act rules with the intention to evade payment of tax. So in short, you have sold goods or you have purchased goods without an invoice. Clearly, it is with intention to evade tax. Or you have purchased goods, sold goods, you have invoice, but purposefully you have taken a lesser rate classification or a lower valuation. Again, it is for evading tax. Again, your goods become liable for confiscation. Next, does not account for goods on which he is liable to pay tax under this act. So there are goods which are obviously taxable and you are not disclosing them in your books. It means you are trying to do unbilled transaction. Next is supplies goods liable to tax without having applied for registration. So your turnover crosses the threshold. You should have taken registration, but without registration, you continue doing the business. Obviously, again, this is to evade tax. Contravenes any provisions of the Act rules made thereunder with the intent to evade payment of tax. So besides the above specific cases, you are doing any other activity which is ultimately leading to your evasion of tax. Uses any conveyance as a means of transport for carriage of goods in contravention of the provisions of this Act rules made thereunder, unless the owner of the conveyance prove that it was so used without the knowledge or connivance of the owner himself. So wherever goods are tried to be transported and that is to done in contravention of the provisions of this act, again it makes the goods liable for confiscation. So if you see, students, in all these cases the basic ideology is that you are resorting to any such act which is in the eyes of law an attempt to evade payment of tax, and that will not make your goods liable for confiscation, and it will empower the officer to conduct search. Now comes the important point. Officer who is carrying out search has the power to search and even seize, obviously, which goods which are liable for confiscation. And besides goods, they can even seize document, books, things which are relevant to the proceedings. However, if it is not practical to search, seize any of the goods, then the same may be detained, which is called as constructive seizure. The person from whom these are seized shall be entitled to take copies extract of the seized records in the presence of the authorized officer. Taking copies or extract may be denied, where in the opinion of the officer, making such copies or taking such extracts may prejudicially affect the investigation. During search, the officer has the power to break open the door of the premises authorized to be searched if access to the same is denied. Similarly, while carrying out search within the premises, he can break open any almirah box if access is denied. So, first part, that during search, they have power to break open doors of premises. So, if there is a room which the officer believes you are trying to hide some goods or documents over there and you are not providing the keys, they can break open the door. Similarly, if in a room there is some box, there is some almirah, there is some place where you are storing or keeping the goods or documents and you are not providing the keys, that almirah, that box can be again broke open. Further, the seized documents, books, things shall be retained only till the time the same are required for examination, inquiry proceedings. And if these are not relied on for the case, then the same shall be returned within 30 days. So whatever you have seized, you can keep them until the inquiry is going on. But if you are not using them, if they are of no use, you will have to return it back within 30 days. Next, manner of release of confiscated goods and documents. First is provisional. The seized goods shall be released on a provisional basis on execution of bond and furnishing of prescribed amount of security, final or actual return. In case of seizure, a notice has to be issued within 6 months. If no notice is issued within a period of 6 months, all goods which are seized shall be returned. However, the period of 6 months can be extended for further 6 months by the proper officer. Disposal. The government may, having regard to the nature of goods like perishable, hazardous, or they are depreciating in value, or because of constraint in storage space of the goods, notify the goods which shall be disposed by the officer. If during a search such specified goods have been seized, the proper officer shall prepare an inventory of such goods and then they may be disposed of. Now, how to conduct a search? To ensure that provisions of search and seizures are implemented in a proper manner, the Act stipulates that the search and seizure shall be carried out in accordance with the provisions of Criminal Procedure Code. Section 100 of the Criminal Procedure Code is dealing with this. So what it says, basic requirements should be observed during search. Following principles should be observed. No search of premises should be carried out without a valid warrant. So first thing you require is a proper search warrant. There should invariably be a lady officer accompanying the search, especially where you are going to residence of a person. The officer, before starting the search, should disclose their identity by showing their I cards. Next, the search warrant should be executed before the start of the search by showing the same to the person in charge, and in signature should be taken on the body of the search warrant in token of having seen the same. The signatures of at least 2 witnesses should also be taken on the search warrant. Next, the search should be made in presence of at least 2 independent witnesses. If no such inhabitants are available, the inhabitants of any other locality should be asked to witness the search. Before the start of search, the team of officers conducting the search and the accompanying witness should offer for their personal search, so that it should not be claimed later that they themselves have brought some fictitious things and placed here and then said that this is found in your premises. Then a panchnama of the proceedings of the search should necessarily be prepared on the spot. A list of all goods, documents recovered and detained should be prepared and annexed. So whatever is found in the search, a list of that is prepared, a panchnama is drawn, and it has to be the list, that is the list of goods found, has to be attached to that panchnama. After the search is over, the search warrant duly executed should be returned in original to the issuing officer with a report regarding the outcome of the search. The issuing authority of search warrant should maintain register of records of search warrant issued and returned, and used search warrant should be kept in records. Copy of panchnama along with annexure should be given to the person in charge of the premises. Now, what should be there in the search warrant? So a search warrant should contain first the violation. So what you have contravened, that should be clearly written. The details of the premises, that is address, house number, etc. Name, designation of the person who has authorized the search. Name of the officer with full designation. date and place of issuing the search warrant, serial number of the warrant, and period of validity. Safeguards provided for in respect of search seizure. Certain safeguards are provided in section 67. What are they? Seized goods or documents should not be retained beyond the period necessary for examination. So whatever you are taking away from me, you have to return it back once your examination is over. Photocopies of documents should be allowed. So whatever documents you are taking, you should allow me to take photocopies. For seized goods, if a notice is not issued within 6 months of its seizure, goods shall be returned to the person from whose possession it is seized. Certain specified category of goods like perishable, hazardous, etc. needs to be disposed of immediately. For instance, newspaper, periodicals, camphor, saffron, petroleum products, rent sanders, cells, batteries, etc. refills for ballpoint pen, etc. and inventory of such goods if seized shall be made. And finally, the provisions of the Criminal Procedure Code relating to search will apply. Now we go to inspection while the goods are in movement. Now this is mainly applicable to e-way bill. So what is this? So whenever your goods are being moved from one place to another, or you can say transported from one place to another, at such time, it is compulsory as per provisions of section 68 read with rule 138 that you should first prepare an e-way bill. The e-way bill has to be prepared as per the e-way bill portal, on the e-way bill portal as per the provisions of the law, and the movement of the goods should be supported by the valid document and the e-way bill. If you fail to prepare the e-way bill, or if the e-way bill is not completely covering the details of your goods, then this section empowers the proper officer to inspect the goods in transit, to inspect the vehicle, and if required, even detain the goods until and unless proper penalty is paid. Now, students, coming to an important part, that is power of arrest. Now, we all understand what is arrest. Arrest is taking the physical custody of the person. Now, please understand, taking somebody in physical custody is depriving that person of one of the fundamental rights, which is the right of freedom. Hence, the action of arrest has to be done very strictly in strict accordance with the law. Now, for this, the law has provided list of various offenses in connection with the the arrest can be done. Further, they have also provided for the amount involved so that the arrest of a person can be done. Now, what are the provisions? The commissioner can authorize an officer to arrest a person if he has reasons to believe that the person has committed an offense attracting a punishment which is prescribed in section 132 bracket 1 A, B, C, D or under 132(2). The details provision we are going to discuss later. Now, this essentially means that a person can be arrested only where the tax evasion is more than 2 crore. So when we read this section 132, we get to know that it covers these offenses, but up to an amount which is exceeding 2 crores. Moreover, the monetary limit shall be not applicable if the offenses are committed again. So if you are repeating the same offense, in that case, 2 crore is not required. So even for lesser amount, the officer is entitled or given the power to arrest you. Now, what is the safeguard for a person who is under arrest? Now, this is important, students. There are certain safeguards given to you. First, if a person is arrested for a cognizable offense, he must be informed in writing of the grounds of arrest and he must be produced before a magistrate within 24 hours. If a person is arrested for non-cognizable and bearable offense, the Deputy Assistant Commissioner can release him on bail and he will be subject to the same provisions as an officer in charge of police station under 436 of Criminal Procedure Code. All arrest must be in accordance with the provisions of Criminal Procedure Code. So there is no separate provision in the GST law. Only the GST law has provided the offenses and the monetary limits when arrest will apply. Once arrest is applicable, the manner of arrest, the safeguards, the manner of keeping the person in custody, everything has to be as per the Code of Criminal Procedure. Now, meaning of cognizable. So here you find reference of cognizable and non-cognizable. So Cognizable offense means serious category of offenses where the police officer has the authority to make the arrest even without a arrest warrant and to start investigation with or without the permission of the court. So that is what is cognizable. Non-cognizable means relatively less serious offense and in respect of which the police officer cannot directly arrest the person without having a proper arrest warrant and also cannot start investigation without the court's order. So that is what is the difference between cognizable and non-cognizable offenses. So section 132 provides that offenses relating to taxable goods service where the amount of tax evaded or the amount of input tax credit wrongly availed or the amount of refund wrongly taken exceeds 5 crores. In such cases, it shall be cognizable. So 5 crore is the criteria to treat the offense as a serious offense where the officer can directly arrest a person and it will be non-bailable and the bail can be granted only by the judicial magistrate. Other offenses will be non-cognizable and they will be bailable. An arrested person shall be released on bail immediately by the deputy or assistant commissioner. Now, what are the precautions? So the provisions of Code of Criminal Procedure relating to arrest and procedures of this particular code must be strictly followed in all situations wherever you are doing arrest. It is necessary that all field officers should be fully familiar with the provisions of Criminal Procedure Code. Another important point that is to be noted is section 57 of Criminal Procedure Code, which provides that a person arrested without warrant shall not be detained for a period longer than 24 hours, excluding the journey time from the place of arrest to magistrate. Within this period, as provided in section 56 of the CRPC, the person making the arrest shall send the persons who are arrested without warrant before a magistrate having jurisdiction. What are the guidelines? The decision to arrest needs to be taken on case-to-case basis, considering different factors such as nature and gravity of offense, quantum of duty evaded or credit wrongfully availed, nature and quality of evidence, possibility of evidence being tampered with or witnesses being influenced, cooperation with the investigation. The power to arrest has to be exercised after careful consideration of the facts. Now, what you have to ensure, what facts have to be carefully analyzed before you resort to arrest? First, to ensure proper investigation. So arrest should be resorted only where you feel that without arrest, investigation cannot happen. To prevent such person from becoming absconding. This is the main reason why arrest is resorted to, because there is a fear that if I do not arrest the person now, the person may flee either that place or may even flee India. Masterminds or key operators affecting proxy, benami, import, exports in the name of dummy or non-existent persons. Now again, this is very crucial because since the transaction is done in the name of some other person, the main mastermind is always free. And if that mastermind is not arrested now, again, there is a chance that that mastermind may not be traceable later. Next, mastermind or key operators, sorry, it is a repetition, where the intent to evade duty is evident and elements of mens rea, that is guilty mind, is clear. Next is prevention of the possibility of tampering with evidence. Many times, the reason given for arresting is that if I do not arrest the person is in such a position that the person may damage or dispose of the necessary evidence so that in future the action of any type of action by the department may not be successful. Next, intimidating or influencing witnesses. Again, this is another reason that where the person is in such power position that the person can either intimidate or influence the witness against the department and where the amount involved is huge. So these are the circumstances to be considered, and only when these are grave and these facts are present, the arrest may be resorted to. Now, a milder option instead of search, instead of inspection is instead of department going to the taxpayer may be summoned to come and produce some evidence or produce or give some statement. So this is under section 70, where the department is asking the person to come and give the statement. Now, this may happen either during the course of an inquiry. So when the department has gone for inquiry, at that time, it may ask the person to give the statement, or the person to whom the summons are issued is duty bound to appear before the officer and bound to provide the evidence statement on oath. Further, the person is also bound to produce all documents which were required to be furnished. Now, asking for evidence or requiring to produce document does not permit calling for entire set of books. So when here you are allowed as a department to ask for information or ask for books, it does not mean that you can ask for everything. It is important to call for specific evidence or documents. So whenever you are calling a person, summoning a person, you have to mention the exact nature of information, documents that you are requiring, and that person should bring along with the person. Recording a statement on oath is not the conclusion of investigation, but in fact, it is the starting point of the investigation. So when I record a statement of a person who is summoned and that is done on oath, that will serve as an evidence in future for doing the proceedings. Statements made in summon proceedings are inherently unreliable for the reason that the person may be anxious due to the nature of proceedings. Such statements are also not free from doubt due to any inimical relations between the person recording the statement and the person or entity charged with the offense. So these are the reasons why many times the search statements may not be considered as correct in the court of law. So reliability of statements, whether this statement can be reliable or not, is covered in section 136, where 5 circumstances are stated wherein statements may be accepted by the courts as reliable. These are discussed in chapter 21. In all other circumstances, the court will administer oath again and record evidence. So except those 5 circumstances, in remaining circumstances, whatever statements were recorded at summons, the court may not accept it, and the court will say, okay, you again record the statement separately. Now, responsibility of the person so summoned. All persons summoned are bound to attend either in person or by an authorized representative. As such, officer may direct, and the person so appearing shall state the truth during the examination or make statements or produce such document and other things as may be required. Student, sir, actually में मेरा sore throat है sir. Because of that, there is a problem, sir. So next part, students, is consequences of non-appearance. So you are served a summon. You are asked to be present in the department on a particular date and time, but you fail to do that. Now, what will be the consequences? The proceedings before the official who has issued summon is deemed to be a judicial proceedings. So if a person does not appear on the date when it is summoned and there is no reasonable justification, then the person can be prosecuted under 174 of the Indian Penal Code. If the person absconds to avoid the service of summons, he can again be prosecuted under section 172. And in case he does not produce the documents or records required to be produced, he can be prosecuted under section 175. So these are the various provisions of the Indian Penal Code where you may be covered. In case he gives false evidence, he can be prosecuted under 193. In addition, if a person does not appear before the officer who has issued the summons, he is liable to a penalty up to 25,000 under section 122 bracket 3 of this act. Now, what are the guidelines for issuance of summons? The CBIC has issued some guidelines from time to time to ensure that summons are not misused. The important highlights are summons are to be issued as the last resort where the assessee are not cooperating, and this section should not be used for summoning the top management. Next, the language of the summons should not be harsh and legally worded in manner which causes unnecessary mental stress, embarrassment to the receiver. Summons by superintendent should be issued after obtaining prior permission from the officer who is at least of the rank of assistant commissioner with reasons for issuance of the summons, where for operational reasons it is not possible to obtain such prior written permission, oral or telephonic permissions from such higher authority must be obtained, and the same should be put in writing and intimated to the officer. In all cases where summon is issued, the officer issuing summon should submit a report or should record a brief of the proceedings in the case file and submit the same to the officer who has given the summons. Senior management officers such as CEO, CFO, general managers of large companies, public sector undertakings should not generally be issued summons at the first instant. They should be summoned only when there are indications in the investigation that they are involved. This is important just to ensure that unnecessarily they are not troubled. Next, precautions to be observed while issuing summons. The following precautions should generally be observed when summoning a person. What are they? A summons should not be issued for appearance where it is not required. The power to summon can be exercised only when there is an inquiry being undertaken and the attendance of the person is considered necessary. So students, this is important to be noted that the officer who is issuing summon should first ensure, I'll say, have that particular proof that the appearance of the person was at most necessary, and without the person's appearance, the proceedings could not be continued. Normally, normally summons should not be issued repeatedly. As far as practicable, the statement of the accused should be recorded in minimum number of appearances. The time of appearance given in the summons should be respected and no person should be made to wait. Now, this is actually what is not happening. Many times you are summoned in the morning and your hearing starts late evening. So, preferably statement should be recorded during office hours. However, an exception could be made regarding time and place of recording the statements having regard to the facts in the case. Now we come to another power, that is access to business premises. Now, you'll say, sir, we already studied investigation, we already studied search. What else is this? So, see, many times it is possible that I do not necessarily believe that you are a tax evader, but still, I want to confirm by checking your books. And for the purpose of checking your books, I wish to visit your premises. I may call for the books in my office, but I have a doubt that you may not bring everything. In such cases, this particular power may be resorted to. Business premises, which may be required for the purpose of either carrying out audit, scrutiny, verification, and checks as may be necessary to safeguard the interests of revenue. During such access, the officer can inspect the books, documents, computer program, software, and such other things as may be required. Now, it is a duty of the person in charge of such premises to furnish the required document within 15 working days from the day when the demand was made. Similarly, the person in charge of business premises are also duty bound to furnish such document to the audit party who is deputed by the proper officer, which may be the chartered accountant, cost accountants, as we saw in section 66. Now, following records are covered by this provision and are to be produced compulsory. First, all the records which you are maintaining and which are declared, trial balance, annual financial accounts which are audited, cost reports, income tax audit reports, and other relevant records. This power under 71 may be contrasted with the power under 67. So 67 is inspecting the premises, but it may be noted that circumstances when each of these sections are applicable is not similar. 71 is more general and it predominantly give access to the place of business only, and that too only for the purpose of inspecting books, for carrying out audit, scrutiny, etc. Whereas 67 is applicable in specific instances and applies to specific person's place where the department has reasons to believe that there is intent to evade taxes. So obviously 67 is more stricter and more severe. Next, officers to assist proper officer. Now, whenever you are going for any type of severe actions, you may require the help of police. So this is where section 72 comes into the picture. It says that following officers have been empowered and are required to assist the CGST officers in execution of the act. Who are they? Police. That is, these are the officers who can accompany you. Officers from police department, railways, customs, officers of state GST, engage in collection of GST, officer of state or central engage in collection of land revenue, village officers, and any other class of officers. So these may accompany the proper officer whenever the proper officer is going for any severe or strict action. So students, these are some important points. Let us see if we have anything additional in the test your knowledge section. So explain the situation in which access to business premises is allowed. We studied this. Explain the safeguards under 69 to a person who is placed under arrest. Who can order for carrying out inspection? Who can order for search? Describe the powers. So basically we have covered all of this. So that is all, students. So with this, we complete this topic of inspection, search, etc. Next topic that we are going to cover today is again an important one, that is demand and recovery. But before that, let us take a break. Again, let us understand it in detail because this is again an important topic for your syllabus. So what basically is a demand? So whenever any tax is due from you, the department has the power to ask for that tax. This is what is called as demand. And in case you do not pay that tax, you fail to pay that tax even despite of the demand, then the act empowers the officer to initiate the recovery. So wherever you have not paid the tax, or it is short paid, or erroneously refunded, or in case of ITC, you have availed excess ITC, in that particular case, the act empowers the department, the officer, to demand and recover the tax from you. Again, there are some common definitions. Now we start with the section which empowers the department to recover the tax. Now, how to recover any outstanding amount? Now again, what are the different reasons where demand can be made? So first, tax is either not paid or it is short paid. So either you have completely not paid the tax or you have paid it at a lower rate and the officer believes it is at a higher rate. Or you have taken a refund which is found to be erroneous. Or you have wrongly availed and utilized input tax credit. Now if this is happening for financial year 24-25 onwards, we have a new section. Prior to that, we had 73 and 74, two different sections. Now they have been merged into one section, that is 74A. Now basically what this section does is it empowers the officer to proceed against the taxpayer by issuing a notice asking the taxpayer to pay the amount. So Section 74 stipulates the manner in which the tax liability of a person should be determined in all of these cases. And it may be even in the case where it is fraud or where it is non-fraud. Now, both cases are covered under the same section. Earlier, you had separate section for non-fraud cases, which was 73, and for fraud cases, it was 74. Now, for both, we have 74A. Limitation. Most important point is that any legal proceedings must have an element of certainty. So there should be a timeliness or time boundingness. Now the law of limitation is built on the principle any action under law must be taken within a stipulated time frame. Otherwise, dispute will remain open-ended and uncertain. So the purpose of limitation in a tax law is to fix a definite timeline within which the authorities can take their action. This ensures that tax matters are not kept open indefinitely, and it gives certainty and finality both to the taxpayer and the department that, okay, now this particular year's dispute is over. Principle of natural justice. In order to adhere to the principle of natural justice before raising any demand, a notice is issued which is called as show cause notice. This we discussed in the previous chapter also. So it is a principle of natural justice that even though the department officer feels, or let us say they have a 100% assurance that tax is payable by you, they cannot directly demand the tax because they have to give you an opportunity to defend yourself. So this is done by issuing a show cause notice, which grants an opportunity to the person that they can defend themselves by producing the relevant proofs, documents, whatever they have in their defense. Now 74A provides standardized timelines and procedure for both types of cases, that is fraud and non-fraud cases. How? So the show cause notice can be issued within 42 months from the due date of furnishing of annual return or from the date of erroneous refunds. The order must be passed within 1 year from the date of SCN or from the date of erroneous refunds. Now, the incidence of short payment, non-payment, erroneous refund, or utilization of ITC may be caused because of inadvertent mistake. That is because of non-fraud reasons where there was no intention or deliberate attempt to evade tax. So we call them as non-fraud cases, and where there is a deliberate action by the taxpayer or where the taxpayer is intentfully involving in any such action which leads to tax evasion, then those are called as fraud cases. Now we'll discuss the entire section 74A in detail. The first part is about issuance of show cause notice, and we discuss it can be issued in four circumstances. One, tax not paid, short paid, erroneously refunded, or ITC is wrongly availed and utilized, both. Now, SCN requires a person on whom this SCN is issued to give a cause. So, in a short, give their explanation as to why they should not be required to pay the tax and interest which is mentioned in the notice, and also the penalty, if any. The show cause would clearly state the amount of tax interest penalty that the person is liable to pay. Further, the notice should mention the grounds based on which this demand is raised. So the notice cannot be vague. The notice cannot be just saying that you have to pay the amount. It has to justify with legal backup. Now, SCN has to be issued in both cases. Exception: no SCN is required if the disputed amount is less than 1,000 in a financial year. Most important point, pre-SCN intimation. So wherever the SCN is to be issued, the law requires the officer to first issue a pre-show cause intimation so that the taxpayer may, before the actual show cause is issued, take corrective actions and pay the tax before the final show cause is issued. Now, there is another concept called as statement in lieu of SCN. So if SCN is issued for one particular period, so all the grounds and all the evidences, everything is given in year of, let us say, financial year 24-25. Now, for the same grounds and for the same reason, they have to issue again for 25, 26, 26, 27. They need not issue the complete show cause. They can only give a statement. Now, this statement is allowed if the grounds are completely same. So, if the grounds are given in year one, then for all further years, if the grounds are same, only the amounts are changing, values are changing, the section allows the department to issue a statement. The service of such statement for subsequent period shall be deemed to be service of show cause, and the person will be required to reply. Now, what is the time limitation? The time limitation is 42 months from the due date of annual returns or from the date of from the date of erroneous refund. Now, what is the quantum of penalty? Now, this is where the difference is. Fraud cases, penalty is equal to the amount of tax due. Non-fraud cases, penalty is higher of 10% of tax due or 10,000. 10,000 which is under each act, so under CGST as well as SGST, so total is 20,000. Now, issuance of order, the person chargeable with tax may give the representation to the proper officer, and the proper officer, after considering the representation, will finalize what according to the officer is the tax interest and penalty. The officer has to issue this order within 12 months from the date of issuance of show cause. However, if the officer is unable to issue the order within this time, the commissioner or any officer authorized by the commissioner who is senior in rank but not below JC may extend this period. Such extension may be given for a maximum of 6 months, provided reason for delay in issuing of order are recorded in writing and it is done before the expiry of the 12 months period. Now, payment of tax interest and penalty before issuance of show cause. Now, the law is giving you an opportunity that before the show cause is issued, you may clear your dues. In case of non-fraud, penalty will be completely waived off, whereas in case of fraud, the penalty will be reduced to 15%. So, if before issuance of show cause, you are ready to pay the entire liability, we will not levy any penalty if it is a non-fraud case, and we will levy penalty only up to 15% if it is a fraud case. Now, whatever you have paid, if that amount falls short of the amount actually payable, where the proper officer is of the opinion that the amount paid as above in fraud or non-fraud cases is short of the amount actually payable, he will proceed to issue SCN in respect of such amount which falls short. The option of paying tax and interest and penalty before issuance of show cause, so as to avoid issuance of show cause, is available in both fraud and non-fraud cases. Now, payment of tax and interest within 60 days of issuance of show cause. Now, one was before issuance of show cause, now show cause is issued, and within 60 days of that, if you are paying. So in non-fraud cases, the person chargeable with tax may, along with interest under section 50, may within 60 days of issuance of show cause pay the amount of tax and interest and inform the proper officer. In such cases, no penalty is payable and all proceedings shall be deemed to be concluded. However, in fraud cases, if you remember, before issuance of show cause, if you are paying, it was 15%. Now, if after issuance of show cause, but within 60 days, if you are ready to pay, the penalty will be levied only 25% of the amount of tax. Again, if you have paid the amount of entire tax, entire interest, and 25% of penalty, then the proceedings will be concluded. Now, payment of tax, interest, and penalty within 60 days of communication of order. Now, you did not pay at the show cause stage. Now it comes the order. Now, if after issuance of order, again you are paying it within 60 days, in case of fraud, the penalty will now be 50% of the tax if it is done within 60 days. Penalty in case of non-payment of self-assessed tax or amount collected within 30 days of due date. Now, in case of non-fraud, if the amount of self-assessed tax or any amount collected as tax has not been paid within a period of 30 days from the due date of payment, then the penalty will always be 10% or 10,000, whichever is higher. Again, 10,000 is per act. This provision is notwithstanding anything contained in the above clauses. In other words, in such cases, imposition of penalty is mandatory and there is no option of waiver. So, where even in case of non-fraud, the tax was collected by you and not paid, then the penalty is there. It is compulsory. There is no waiver also, even if you pay before show cause or within 60 days of the show cause. Now, for the purpose of this section, the expression all proceedings in respect of the said notice shall not include proceedings under 132. 132 is in relation of prosecution. That's the person can be prosecuted under the GST law, even if no further demand can be raised for tax interest penalty. Prosecution in criminal court is independent and can be in addition to penalty. So proceedings will not include the prosecution. Where notice under the same proceedings is issued to the main person liable to pay tax and some other persons, and such proceedings against the main person has been concluded, the proceedings against all persons liable to pay penalty under 122, 125 are deemed to be concluded. So this is generally happening in case of circular trading and those type of cases where multiple people are connected, but one is the main mastermind. If the proceeding of that person is concluded, other person's proceedings will be automatically be concluded. Sometimes if notice is issued to a company, notice may also be issued to its directors, employees, transporter for the same cause of action. These are termed as co-notices, while the company is the main notice. Again, conclusion of proceedings against the company will be deemed to be conclusion against all these co-notices. Now, for the purpose of this act, the term suppression will mean what? It will mean non-declaration of facts or information which a taxable person is required to declare in the returns. So we have seen that wherever it is a fraud case, it may be fraud or misrepresentation or suppression. So what is suppression? You are required to declare something in your returns which you have not declared, that is suppression. So what you have not declared in return, statement, report, or any other document furnished under this act or rules made thereunder, or failure to furnish any information on being asked for in writing by the proper officer. Thus, the definition of suppression is very clear that only if the information was required to be disclosed and it is not disclosed, that would tantamount to suppression. So now this is the summary of the provision. So we have already discussed this. Now, general provisions relating to determination of tax. Now we just studied 74A, which is the provision dealing with raising demand, and that is done through the show cause route. Now, there are some, you can say, relaxations given, some precautions given, which have to be followed by the department whenever they are proceeding with 74A notices. So what are these precautions? First, period of stay order to be excluded in computing the limitation. Now let us say you have gone to the court sorry, and the court has put stay on any of the proceedings. So for whatever period the court stay is in force, that much period will be removed from the limitation period. So we saw the limitation period as 42 weeks. this 42 weeks will be, in other words, extended by the period for which the court has put a stay. In case of charges of frauds, willful misstatement, suppression of facts are not established for a noticee who was given a notice under the fraud category, penalty prescribed for non-fraud cases is payable. So in simple words, originally the department had alleged fraud at the time of issuing show cause, but later on it was not proved by the department, or the assessee could give counters to prove that it was not fraud, it was only a inadvertent mistake. Then automatically, even though the original notice was on fraud basis, but since the fraud is not proved, the penalty that would be leviable on you will be of non-fraud. Next, adjudication order issued in pursuance of appellate authority, tribunal or court's decision to be issued within 2 years. So what it means, so let us say there was a stay on this proceedings, and later on, after the final order or judgment, the department now wants to proceed against the taxpayer. So in such cases, the department will have to do that within 2 years. So wherever the original stay was there, and hence the this could not be proceeded with, the proceedings could not be completed. Now whenever they will be continued, they have to be completed within 2 years. Most important, opportunity of being heard. Now again, students, this is what is the principle of natural justice. So wherever you are required to show cause, it is important on the part of the department to give you a proper opportunity of being heard. If the department is not giving proper opportunity of being heard before passing any decision, and the decision is adverse, that particular decision will become null and void. Next, during the course of proceedings, you are allowed to ask for adjournment, and the department should be giving adjournment. However, there is a capping put on adjournment so that there is no misuse of this particular provisions. So that capping is that maximum 3 adjournments only can be allowed. Next, adjudication order should be a speaking order. So what it means? It means simply that the adjudication order should mention each and every point in detail. Whatever submissions were given by the taxpayer in their so-called reply, all the submissions should be considered, and considering those submissions properly, then only there has to be an order, and the order should counter each and every submission given by the taxpayer. That order will only be a speaking order. If the order does not comply with this, again the order will fail and it may be struck down by the courts. Tax interest penalty demanded in order not to exceed the amount specified in notice. Again, this is a precondition. You have to ensure that whatever tax was demanded originally in the show cause order should not go beyond that. Next, in case of modification of tax by appellate authority, penalty and interest automatically will get modified because it is dependent and connected with tax. Next, payment of interest mandatory even if not specified in the adjudication order. See, students will have to understand one thing, that interest payments are, you can say, automatic. So for interest, there is no need that the order should specify that interest should be levied. So interest is automatic, and every time whenever there is a tax liability, interest will come. Next, adjudication order to be passed mandatorily within stipulated time. Again, we have seen the time limit. The requirement is that whatever order is passed, that order should strictly follow the timelines. If the order misses the timelines and if the order is not passed within the timelines, the order will become void. In case of appeal filed by the department, again the prejudicial decision of the appellate authority, appellate tribunal, high court, period between the date of decision of the higher court and that of the lower authority to be excluded. So wherever appeal was filed against some prejudicial decision, in that particular case, the date between the date of the decision of the higher authority and that of the lower authority will be excluded while counting the time limit. Amount of self-assessed tax or interest remaining unpaid to be recovered under 79. Now this is very, very important. What is this point, students? Let us understand. So whenever there is any type of self-assessed tax. Now what is self-assessed tax? That is also explained. Self-assessed tax shall include the tax payable in respect of details of outward supplies which is furnished under section 37, that is under in your GSTR 1, but which is not included in your 3B. So what is self-assessed tax? You disclose an invoice, you disclose a sale, you disclose a supply in GSTR 1, but you did not pay the tax in 3B. This is what is self-assessed tax. Now what is given? So wherever there is self-assessed tax, that will be recovered along with interest. So self-assessed tax has to be recovered along with interest, and that will be recovered in accordance with section 79. So the scope of the term self-assessed tax is wide enough, and hence the recovery proceedings can start straight away by the officer for this particular amount which was reflected in GSTR 1 but was not paid in 3B. In other words, where the tax payable is in respect of outward supplies furnished in GSTR 1 has not been paid through 3B, either wholly or partly, or any amount of interest payable on such amount remains unpaid, the tax short paid on such self-assessed and thus self-admitted liability. So means what? So whenever you yourself have declared something in GSTR 1 and not paid in 3B, it is your self-assessed liability. There is no need for the officer to issue notice and do the entire procedure. The officer can recover this amount directly under 79. However, where the difference or the mismatch between GSTR 1 and 3B has arisen due to genuine reasons like typographical error, wrongly reported details in 1 or 3B, which may be rectified in subsequent returns. In such cases, where a supply could not be declared in 1 of an earlier period, though the tax on the same was paid by correctly reporting the same in Form 3B. So these are the cases where genuinely there is a mistake. In such cases, the recovery will not happen. So recovery proceedings will be initiated by the proper officer only when the said person either fails to reply to the proper officer or fails to make the payment of such amount which is short paid in the prescribed time, or fails to explain the reasons for such amount which is short paid. Next, in case of penalty imposed under these sections 73, 74, 74, in no other penalty to be imposed for the same act or omission. So this is again logical. For same mistake, I cannot levy penalty twice. Now students, comes an important part or provision, which is tax collected but not deposited. Now see, this is a very significant point because it may happen that you have collected tax from your buyer by adding the same amount in your invoice, and despite of you collecting the tax, you have not deposited with the government. Now whenever this happens, section 76 comes into the picture. Now what does 76 says? Amount representing tax collected from any person to be paid to the central government. So whenever you have collected any amount which you yourself are claiming to be tax, so once you yourself are claiming that it is tax, it has to be deposited with the government. Now, where an amount is required to be paid to the government under subsection 1 and which has not been so paid, the proper officer may serve on the person liable to pay such amount a notice requiring him to show cause as to why the said amount is not to be recovered. So for recovering this amount, again, a show cause has to be issued, then the proper officer shall, depending upon whatever you have replied, will determine the amount due from you, and thereupon such person shall pay the amount so determined. Interest, obviously, since you have paid the amount late, collected and not paid, interest will apply on such amount. Again, principle of natural justice to be followed, and opportunity of hearing has to be given before any adverse action or order is passed. Time limit. What is the time limit for issuing this order? The proper officer shall issue the order within 1 year from the date of issuance of the notice. Where issuance of notice is state, again that period of 1 year will be extended. Next, order must be a speaking order. This is again as per section 75, it is repeated over here. Adjustment of amount payable under section 76(1)(3). So the amount paid to the government under subsection 1 or 3 shall be adjusted against tax payable, if any, by the person in relation to the supplies referred to in subsection 1. So whatever amount you have paid, that will be adjusted against the amount payable. Then comes an important provision, students. Tax wrongfully collected and paid to central or state government. Now what is this point? So it may happen that you have made a wrong classification. So what should have been interstate supply, you have classified it as intrastate supply, so you paid CNS, or vice versa. Instead of paying CNS, you have paid IGST. So there is a parallel provision. 77 is under CGST SGST Act and 19 is under IGST Act. Now what does both these provisions say? That wherever you have wrongly classified your supply, and hence tax is paid by you, but a wrong tax is paid by you. So in such cases, where you have paid a wrong tax, but there is no intention of tax evasion because you have actually paid the tax, only the thing is that your classification is wrong. So in such cases, the provision says that you pay the correct tax and you demand refund for the wrong tax. So in this case, the law is clear. The law says that you pay the right tax and you can claim back the refund of the wrong tax which you have paid. Now come, students, the recovery proceedings. So what are recovery proceedings? So these are the final steps towards realizing the amount of tax which you have not paid. So after your assessment is over, if you have still not paid the amount, the government can recover the amount from you. Now what is the procedure? So first, section 78, what it says? Any amount payable by the taxable person in persons of an order pass must be paid by such person within a period of 3 months. So you are given 3 months timeline after the passing of order to make the payment. Now, if a taxable person fails to do so, recovery proceedings will be initiated. However, the proper officer considers it expedience in the interest of revenue, he may, for reasons to be recorded in writing, require the said taxable person to make such payment within such period, which is even less than 3 months. The first point is, as per section 78, 3 months period will be allowed. Within that amount, the payment has to be made. Then comes section 79. Just a minute, students. So, recovery. If the amount payable is not paid by the person within the limit which we saw of 3 months in the previous section, now the officer can proceed with the recovery action. Now in this case, the recovery action will be taken in the prescribed manner. The option for recovery of government dues includes what? First, deduction of money from any amount payable to such taxpayers. So let us say the GST already has some amount belonging to you, like your cash ledger balance, like your refund amount. They may adjust your tax payable from that. Detaining and selling goods. So they may dispose of the goods which they may have detained for the purpose of recovery. If they have not detained, they can now detain and dispose of the goods. Directing any other person from whom the money is due. So they can approach your debtors, they can approach those persons from where you have to get the money and ask them to pay directly to the government. And finally, they can attach your property for recovery. Now these are the different modes given. So first mode, as we discussed, where any amount the government is already having belonging to you. So that amount the government can utilize first. So broadly, this is, you can say, the sequence in which recovery can happen. So firstly, they will recover the amount from whatever balance the government is already having belonging to you, like your cash ledger balance, your refund amount. Second, they may proceed to recover the amount by selling goods which are under the control of the proper officer. Now, what this requires is the proper officer may recover or may require any other specified officer to recover the amounts so payable from the defaulter by detaining and selling the goods. Now, how this can be done? It may be done through the process of auction, which may include e-auction. The proper officer will prepare an inventory and estimate the market value and proceed to sell so much of the goods which is only required to recover their outstanding amount. Next is garnishee, where recovery is done from the third person. So where some other person is owing money to you. So it may include your debtors, it may include those people with whom you have kept some deposit or something and they owe that money to you. The government can issue notice to them and ask them to pay the money directly to the government instead of paying it to you. Where such a notice is issued to a post office, banking company or insurance company, it shall not be necessary to produce any passbook, deposit receipt, etc. In case the person to whom the notice is issued fails to make the payment in pursuance thereof to the government, he shall be deemed to be a defaulter and now the government can recover from that person's personally. Next, recovery by sale of movable immovable property. Now, where I cannot recover even from a third party, then I will proceed to attach your property and dispose of it. So the officer may, in accordance with the rules to be made in this behalf, restrain any movable or immovable property belonging to or under the control of such person and detain the same until the amount is paid or payable, and in case any part of the said amount payable or the cost of the distress or keeping of the property remains unpaid for a period of 30 days, even after such distress may cause the said property to be sold, then through auction or e-auction, they may sell the property and with the proceeds of such sale may satisfy the amount including the cost. So the proper officer shall prepare a list of movable immovable property belonging to the defaulter, estimate their value as per the prevalent market rates, issue an order of attachment or restraint, and a notice for sale prohibiting any transaction with regards to such movable immovable property. Now, in case of immovable property, what can be done? The order shall be affixed on the property till the confirmation of sale, and in case of movable property, the officer can simply seize the property. Fine. Where it is not possible to pay the balance of sale proceeds as per the above provisions to the person concerned within a period of 6 months from the date of sale of such goods or conveyance of such further period as the proper officer may allow, such balance of sale proceeds shall be deposited with the fund. Next, recovery as arrears of land revenue. Now, what is this? So when all the above modes are not possible, then the government or the department will prepare a certificate in the prescribed form specifying how much amount is due from you and send it to the collector of your district. And then the collector will proceed to realize and recover this amount from you as if it was arrears of land revenue and the respective provisions will apply. Next, recovery as fine imposed by the magistrate. Notwithstanding anything contained in Code of Criminal Procedure, the proper officer may file an application to the appropriate magistrate in the prescribed form to recover from the person concerned the amount specified thereunder, and then the magistrate shall proceed to recover the amount. Recovery through execution of a decree. Where any amount is payable to the defaulter in the execution of a decree of a civil court for payment of money or for sale in the enforcement of a mortgage or charge, the proper officer shall send a request to the said court, and now the court shall, subject to the provisions of the Code of Civil Procedure, execute the attached decree. So it may be recovered as a decree. Next, recovery through surety. Where any person has become surety for the amount due by the defaulter, he may be proceeded against under this chapter as if he were the defaulter. Next, recovery from company in liquidation. Where the company is under liquidation, as specified in section 88, the commissioner shall notify the liquidator for the recovery of any amount representing tax, interest, penalty, etc. Now, what are the other provisions governing recovery of tax? Where the term of any bond or other instrument executed under this Act, rules, regulations made thereunder provide that any amount due under such instrument may be recovered in the manner laid down in subsection 1, the amount may, without prejudice to any other mode of recovery, be recovered in accordance with the provisions of section 79(2). So, wherever any bond or any such instrument is executed, what does the Act provides? The amount due under such instruments will be recovered in accordance with the above provisions. Where amount of tax, interest, penalty is payable by a person to the government under any provisions of this Act, rules made thereunder, and it remains unpaid, the proper officer of state or union territory during the course of recovery of such arrears may recover the amount from the said person as if it were arrears of state tax or union territory tax, and credit the amount so recovered to the amount of government. Further, where the amount recovered under subsection 3 is less the amount from the amount due, the amount to be credited to the account of respective government shall be in proportion. So you know there is CS. So where amount recovered is less, they will bifurcate in the same proportion in which the original amount is due. Now, what is the clarification given on legal position of voluntary payment of taxes during course of search, seizure, investigation? Now, many times it is found, students, that whenever the officer comes to your premises for some search or inspection proceedings, they forcefully get the tax deposited from you. Now, first, there is a provision, rather I'll say instruction issued by CBIC that officers should not resort to such forceful means and should not, under any type of coercion or force or threat, make the people pay the tax, at least at the time of these actions of investigation, search, etc. However, where any such thing is done, so where such type of tax is made to be paid by you, in that particular case, there is a circular which says that this will have to be even refunded. The courts in many cases have given this type of decision that despite of the circular saying that you should not forcefully recover, if still the officer during the time of any action is proceeding to recover the tax, then the courts have in many cases said that the amount paid has to be refunded. So, under the Act, the officers have option to make voluntary payment of tax. Such voluntary payment of tax before issuance of show cause notice is permitted, as we studied in 73(5) and 74(5). This helps the taxpayer in discharging their admitted liability, self-ascertained or as ascertained by the taxpayer, without having to bear the burden of interest under section 50 for the delayed payment of tax, and may save him from higher penalty. Now, recovery of taxes not paid or short paid can be made under the provisions of 79 only after following legal process of recovery. However, the law does not bar the taxpayer from voluntarily payment of any tax liability ascertained by him or by any tax officer in respect of such issues, either before or during the course of such proceedings. The tax officer should, however, inform the taxpayer regarding the procedure of voluntary payment. So this is what instruction I was talking about, students, that it has been given as instruction that the officers at the time of any such action should not make it compulsory or forceful for the taxpayers to deposit the amount. And if they do so, as I said, there are many judgments where they have said that this has to be refunded back. Fine. Now, payment of tax and other amounts in installments. Now, this is again a very important provision, students, which you should know, that wherever any amount is payable, you may get the facility of making the payment in installment. But how? So that is what we'll have to understand. So what it says, considering various business aspects, the provisions for payment of all such amounts other than the self-assessed tax in installment have been made. So where only you have self-assessed tax, that cannot be made in installments. Other than self-assessed tax, wherever the tax is determined by the officer, the law provides you to pay the tax in installments. Now, how you can avail this facility? To avail this benefit, you have to make an application to the commissioner specifying the reasons. On receipt of the application, the commissioner may, not it is not compulsory, so it may allow the payment of amount in installments up to a maximum of 24 monthly installments along with interest. Now, if there is a default in payment of any one installment, then the whole outstanding balance becomes due immediately. Now, these provisions are covered in section 80 along with rule 158. What are they saying? The taxable person seeking extension for time for payment of tax or any amount due under this act or for allowing payment of such taxes in installment have to make an application in the prescribed form. Then the commissioner will call for a report from the jurisdictional officer about the financial ability of the person. Commissioner may, upon consideration of the same and for reasons to be recorded in writing, extend the time for payment or allow payment of an amount due under this act other than the amount due as per the self-assessed liability. So only after considering your application and if the commissioner feels that yes, genuinely in your case it is required, the commissioner may allow the facility of installment payment. Now, facility of payment of installment is not allowed in certain cases. What are they? The facility of payment in installment shall not be allowed where the taxable person has already defaulted on the payment of any amount of CSI for which the recovery process is on. The taxable person has not been allowed to make payment in installment in the preceding financial year under any of the acts, and the amount for which installment facility sought is less than 25,000. Next is student transfer of property to be treated as void. Now, what is this? Many times you will find that a taxpayer may, to avoid payment of tax by attachment of his property, because that is the last resort which we studied of recovery, that your property may be attached and disposed of. The taxpayer may do what? The taxpayer may pass on or transfer his property or create a charge of his property in favor of some other person. And this is done so that even if the taxpayer is not paying tax, the property cannot be attached because now the taxpayer has passed on the property. So such charge or transfer shall be treated firstly as void. This is the first provision. However, further it says it shall not be void if it is made for adequate consideration in good faith and without notice of pendency of such proceedings under the act. The first part says such transfer will be void because you have done with the intention of defrauding the government. However, it will not be void where it is genuine transaction done in good faith and for proper consideration. Next, section 82 says tax will be the first charge on the property. So notwithstanding anything to the contrary contained in any law for the time being in force, and save as whatever is provided in the insolvency bankruptcy code, any amount payable by a taxable person or any other person on account of tax interest penalty, which is liable to pay to the government shall be the first charge. So first charge means before any other person can claim the property, the first claim will be of the government towards the outstanding amount. Next, provisional attachment to protect revenue in certain cases, where after initiation of any recovery proceedings under any of these chapters, the commissioner is of the opinion that for the purpose of protecting the interest of the government revenue, it is necessary to do so. He may by order in writing attach provisionally any property which may include bank accounts belonging to the person. So this is again a very severe provision, students. Just a minute, please. So this is a severe provision where the government is empowered to attach your property, which includes bank account. Now, such provisional assessment shall cease to have effect after 1 year. So up to 1 year, your property may remain attached. And when we say it is attached, it means for that period, you cannot use that property. You cannot dispose of that property. Now, what are the provisions? Rule 159 says, where the commissioner decides to attach any property, including bank accounts, in accordance with the aforesaid provision, he shall pass an order to that effect, mentioning therein details of the property which is to be attached. The commissioner will send a copy of the order of attachment to the concerned revenue authority, transport authority, or any such authority to place an encumbrance on the said movable immovable property. Next, the copy of the order of the provisional assessment, including bank account, will also be sent to the person. And where the property attaches of perishable or hazardous nature, in that particular case, and if the taxable person pays an amount equivalent to the market price, or the amount that is or may become payable by the person whichever is lower, the property shall be released. However, where the taxable person fails to pay the amount referred above in respect of the said hazardous or perishable property, the commissioner may dispose of the property to recover the amount. So this is, students, the important point relating to provisional attachment of properties. Next, attachment of debts and shares. A debt which is not secured by a negotiable instrument or a share in a corporation or other movable property not in possession of the defaulter, except for the property deposited in or in custody of any court, it shall be attached by a written order in the prescribed form. So, similar to above provision, this rule also allows that the property which is a debt or which is a share can be attached. Next, attachment of property which is in custody of courts. Now, we saw in the above rule that property which is in custody of the courts cannot be attached, but for that we have a different rule. Where the property to be attached is already in custody of any court or public officer, the proper officer may send the order of attachment to such officer, requesting that such property and any interest or dividend belonging payable thereon may be held till the recovery of the amount payable. So by sending this notice, the proper officer will ensure that the respective court or the respective recovery officer will keep the property in their control until your dues are cleared. Next, attachment of interest in partnership. Where the property to be attached consists of an interest of the defaulter being a partner. So it is nothing but your capital in a firm. Then the proper officer may make an order charging the share of such partner in the partnership property and profits with payment of the amount due under the certificate. So in such cases, the proper officer can attach even your share, your rights in that particular partnership, which includes your capital, your share in profits, etc. Continuation and validation of certain recovery proceedings. Now, where any notice of demand in respect of any tax, interest, penalty, or any other amount payable under this act is served upon a taxable person or any other person, and any appeal or revision is filed, or any other proceedings is initiated in respect of such government dues, then where such government dues are enhanced in appeal, revision, or other proceedings, the commissioner shall serve upon the taxable person or other persons another notice of demand in respect of the amount by which such government dues are enhanced. So simple. Because of any future action like appeal, revision, if your tax payable gets enhanced, you will be informed about the excess amount, and again, you will be called upon to pay such amount. Where such government dues are reduced, then it shall not be necessary for the commissioner to serve upon the taxable person a fresh notice. Obviously, where it is reduced, no need to serve any further notice. Now, proceedings conducted under IBC covered under the term other proceedings. The word other proceedings is not defined in the CGST Act. It is to be mentioned that adjudicating authorities, appellate authorities under IBC are quasi-judicial authorities constituted to deal with civil disputes pertaining to insolvency. So, for instance, under IBC, NCLT serves as an adjudicating authority for insolvency proceedings, which are initiated on application from stakeholder of the entity like the firm, creditors, etc. So, what is clarified? As the proceedings conducted under IBC also adjudicate the government dues pending under the CGST Act or under existing laws against the corporate debtor, the same appears to be covered under the term other proceedings. Now, students, let us take up a few questions for a better understanding of this. So, Mohan Enterprises is entitled for exemption from tax. However, it collects tax from its buyer up to 50,000 in the month of August. It has not deposited the same with the government. Now you are required to brief to Mohan the consequences of collecting tax but not depositing the same. Now we studied this, students, in section 76, which provided for the consequences where tax is collected but not deposited. So what advice you will give? As per section 76, every person who has collected from another person amount representing tax and has not paid to the government shall immediately pay the amount to the government, irrespective of whether the supplies in respect of which the amount was collected are taxable or not. So even if you feel it is not taxable, no problem. You have collected it as tax, you have to pay it to the government. The proper officer shall, after considering the representations, if any, made by the person on whom show cause is served, determine the amount due from such person, and thereupon such person shall pay the amount so determined along with interest at the rate specified. So the amount will be recovered from you with interest. Let us take up another case, which is 7. Subharti Enterprise collected GST on goods supplied by it from its customer on behalf of the said supplier, on belief that the said supply is taxable. However, later on, it is discovered that the goods supplied by it are exempt. The accountant of Subharti Enterprise advised that the amount should about mistakenly collected by Subharti representing tax was not required to be deposited with government. Now, students, this is the same question. So you collected tax under the understanding that a particular supply is taxable. Later on, you yourself realize that it is exempt. So can you keep the tax? The amount is no. We just studied the first question's answer, that whatever amount is collected at tax, even though it may be taxable or not, you have to compulsorily deposit it with the government. Next. Anant & Co. self-assessed its CGST liability at rupees 90,000 for the month of April but failed to make the payment. Subsequently, the department initiated penal proceedings against Anant & Co. for recovery of penalty under 74A for failure to pay GST and issued show cause notice on 10th. Now here, students, what has happened? You have assessed your CGST liability at 90,000, but you have not made the payment. It means you have filed GSTR1. In GSTR1, you have showed that liability, but you have not made the payment. Now, department initiated penal proceedings against the company for recovery of penalty under 74A for failure to pay GST and issued a show cause on 10th August. Anant & Co. deposited the tax along with interest on 25th August and informed the department. Department is contesting that he is liable to pay penalty of 45,000, that is 50% of this. Examine the correctness of stand. Now, students, see, we know that if you pay penalty either before issuance of show cause or after issuance of show cause but before order, there is some discounting in the penalty. But if you remember, to that there is an exception. The exception is self-assessed tax. So in case of self-assessed tax, the position is different. So where you have yourself self-assessed the tax and you have not paid it, in that particular case, the relief may not be as what is allowed in the general code. So what is the point? So due date of the payment was 20th of May. As per 74A, where self-assessed tax is not paid within 30 days from the due date of payment of such tax, in that particular case, penalty of minimum 10% or 10,000, whichever is higher, is payable. Thus, option to pay within 60 days to avoid penalty is not available. Since in the given case, Anand had not paid the self-assessed tax within 30 days, that is by 20th of May, penalty will be this amount. So in this case, the penalty will be 10,000 rupees. Hence, the stand taken by department that the penalty will be levied is correct, but the amount of penalty which the department is saying should be 50% is not correct, because it is 10% of tax or 10,000, whichever is higher. So maximum in this case is 10,000 and not the amount determined by the department. Okay. Next situation, students. Arnav Enterprises, a registered supplier located in Madhya Pradesh, has duly filed its monthly GST returns for the financial year 24-25. During scrutiny of its returns for the said financial year, the proper officer noticed an inadvertent short payment of CGST, SGST totaling 460 on account of bona fide error. Before issuance of show cause notice by the proper officer, Arnav paid the tax of 1 lakh, and on the basis of its own ascertainment along with applicable interest with penalty, if any, on 15 September, and informed the proper officer in writing of such payment. Based on the above facts, answer the following. Ascertain the last date by which the show cause has to be issued. Determine the amount of penalty, penny payable on the payment of 1 lakh by Arnav, assuming that the proper officer decides to issue a show cause under 74A, and in continuation of subpart 3, proper officer issues a show cause notice under 74A on 10th October, what would be the consequences? So we'll go one by one, students. So first, the proper officer can issue a notice within 42 months. For financial year 24-25, the due date of filing annual return is 31st December 25. Therefore, the last date will be 30th of June. Further, 74 stipulates the same limitation period for issuance of show cause, whether short payment is on account of fraud or not fraud. Hence, the answer will remain same. Second part, the person chargeable with tax, wherein tax has been not paid, short paid, and the person is paying the tax along with interest on the basis of his own ascertainment, the proper officer in such cases has to reduce the penalty. Now the question is, if you have made payment on your own ascertainment before issuance of show cause notice, then the provision says that no penalty is payable in respect of the payment of 1 lakh, because that is done before issuance of show cause. However, in case where the short payment of tax is on account of fraud, then students, if you remember, we had studied that you have to pay minimum 15% of tax as the penalty. So if the amount which is payable or which is paid by Arnav is on account of fraud, then the penalty would be 15%, which is 15,000. Next, since Arnav has paid the tax of 1 lakh along with interest before issuance of show cause, no show cause shall be issued in respect of the tax so paid. So up to 1 lakh, the department cannot issue show cause. However, where the proper officer is of the opinion the amount paid is falling short of the actual amount payable, then in that particular case, for the difference amount, they can issue show cause. Thus, in the given case, proper officer can issue the show cause of the difference amount, which is 3,60,000. Now, since already 1 lakh is paid along with interest penalty, to that extent, no show cause can be issued. And for the remaining part, the department can issue show cause. Right? So 360, the department will be issuing show cause. And then the last point, where the person chargeable with tax, wherein tax has not been paid, pays the tax along with interest within 60 days of issuance of show cause. No penalty shall be payable in case it is concluded and the proceeding shall be over. Thus, in the given case, since Arnav has paid the tax of 360 along with applicable interest within 60 days of issuance of show cause, no penalty is payable and the proceedings will be deemed to be concluded. However, if it is determined that these proceedings are carried out and it is a case of fraud, then you will have to pay penalty up to 25% of the outstanding tax, if provided that is also paid within 60 days. So students, this is the different case studies that you may get relating to this chapter. Now let us go to the amendment part. So in amendment part, we have amendment relating to this chapter, which is monetary limits prescribed for issuance of show cause and passing of order under 74A. Now these are the monetary limits, and depending upon these monetary limits, the officer is decided as to who can issue and adjudicate the show cause. So superintendent can issue and adjudicate the show cause provided the amount of tax component involved does not exceed 20 lakhs. If it is exceeding 20 lakhs and not exceeding 2 crores, is exceeding 2 crores, then additional or joint commissioner can adjudicate. So these are the limit, students, which have been provided for the purpose of taking action. It is very important that these limits have to be followed at the time of issue of show cause notice. Further, it is clarified that where a show cause notice is issued under 74A and it involves a demand of both C and I, the proper officer shall be determined on the basis of combined amount of C and I. So as you can see, even in the last column, they have said if it is C and I both, this is the combined amount. So the limit has to be checked not for individual tax, but for collective tax. The proper officer shall be determined based on the highest amount of tax specified in the show cause notice and statement where it is across different periods. And where the proper officer shall be determined based solely on the amount of tax demanded, but not penalties and interest. So the above monetary limits are only for tax component, not for the interest and penalty. So students, with this, we conclude our today's session. We have covered all the 4 topics in detail, and along with that, for important topics, we have also dealt with the case studies that you may expect in the exams. So I'm sure this will be helpful to you for revising and preparing these chapters. With this note, let us conclude today's section. Thank you all. Thank you very, very much. Yes, Ashok ji. Good night, Ashok ji. Thank you.